Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. The mood is somber in the market after yesterday's tragic Air India crash and the conflict between Israel and Iran and the escalating Middle East tensions. Markets are in the red across global markets. Indian markets are down 200 points. The Nifty, Sensex lower by 700 points. The only good thing in the morning, at least, is from a market point of view, is we've managed to recover from the day's low. So, in fact, the opening tick on the Nifty was 24,473. From that point, from the opening tick on the Nifty, we've managed to recover close to about 200 odd points, but still deep in the red. And the mid-cap index that intraday will come up, that's managed a pretty decent intraday pullback. We were down close to about 1.25%, 1 1/3, and from there, we've managed to trim our losses considerably.
Now, the good part about the recovery from the morning is that we've managed to sustain or protect the recent swing low that we had on the Nifty, which was 24,462, which was on the 22nd of May. And today's intraday low is 24,472. So it's just a 10-point gap, but we've managed to recover from exactly those levels, a 200-point recovery for the Nifty from the lows of the day. And as a result of which, there has been some protection on the downside, but still we remain 200 points lower. It is the broader markets that have seen the bigger recovery. The mid-cap index is up almost 1,000 points now from the intraday lows that they had made. So a significant recovery there. And there are, of course, plenty of movers within the broader markets as well. Shipping Corporation of India is one of them, and GE Shipping. Both the shipping-linked names are the top gainers today on the Nifty 500, and that's because of these deteriorating tensions between Iran and Israel, and both of them. The Baltic Dry Index, though, is up 50% in the last 1 month, and that's showing up in these prices as well. And of course, the Jubilant Group companies. Jubilant Ingravia is up 11%. Jubilant Foodworks is up 3%. Jubilant Pharmova, too, is seeing some reaction after the block deal that took place earlier in the day in all of these three companies. So Jubilant Foods, the Jubilant Group companies, almost 2,000 crore worth of shares changing hands. But the focus today is on the commodities space because of the spike in crude oil prices. Manisha is here with us, and she puts the spotlight on what resulted in crude and what lies ahead. Manisha, good morning.
Well, thank you so much for that. Crude oil prices have been on a boil, and you have to use that word yet again because this is exactly what we've been talking about for many, many days right now. It has been facing resistance at 70 months, but once it crossed that, we've seen the prices gain quite strongly. You know, by the New York session yesterday evening, the crude oil prices were down by 1.5% to 2%. It all started to happen in Asia after that report of attack came in, and we did see prices gain up by nearly 10%. That's how it's trading in the Asian markets right now. So that brings us to a 17% of gain in crude oil prices over the week, which is the biggest weekly gain since 2021. In the last 1 month now, the crude oil prices are up by 20%, and that brings us to a positive in 2025, up by nearly 6%. But it really is news-driven right now with expectation or concerns about supply disruption going forward. The Israel has conducted a preemptive strike on Iran, and that news really led to ripples into the market there, where we saw US dollar decline quite sharply, and the buying came in tangible commodities like gold and especially the crude oil prices there. Well, there also have been statements coming in from Israel and Iran. The attack has set off a new conflict in West Asia, and there are concerns about regional war there. This is also an area which is rich in oil, and supply disruptions are concerning. Israel also has declared a state of emergency as it braces for a retaliation from Iran. There have been various statements also suggesting that Iran will target U.S. bases if nuclear talks fail. They've had, remember, 5 rounds of conversation, but without a nuclear deal in place right now. There also are various reports suggesting that Iran could soon retaliate against Israeli targets, including civilian areas, and that is what the Strait or those areas, that region seems to be preparing for. So this is the prospect of a broader conflict in West Asia, in Middle East, which has led to the prices gaining up. This also tells you that apart from supply disruption, it also could lead to a threat of disruption in the way oil flows via Strait of Hormuz, a vital route. This is the area where you have about 20% of global oil flowing through. So that is what the markets are weaving in sense of a premium into the prices there. If you look at the prices itself, well, we've seen very strong numbers come in there. There have been statements from US as well. One, they have started to move away their personnel. This has been happening for the last 3 days, by the way, out of that region because of these ongoing threats and war of words, which has now culminated to on ground. President Trump also yesterday expressed frustration that the oil prices prices in resultant to all of these Middle East tensions have started to run up. 75, 76 is what we are trading at this point in time, with expectations that if this continues today and over the weekend as well, then you are looking at very, very high prices. And it's not just crude oil prices. The crude derivatives like natural gas, heating oil, gasoline have gained up by 4% in Asian markets right now. And that has taken the prices to multi-week and multi-month highs as well. So when you look at on a month-on-month basis, well, April wasn't such a strong month. We actually saw prices decline by 15%. But take a look at May, up 11%. And June already is up by 18% right now. 2023 and 24 were negative years for the crude oil prices. But 25 suddenly has turned positive with nearly 5% of gains.
Thank you very much for that. That's the big story. Still developing, Prashant is now joining in to explain the importance of the Strait of Hormuz.
Well, a big 10% plus surge coming through in oil prices after Israel launched unilateral airstrikes targeting Iran's nuclear facilities and military command structures. A bit of contextual information. How did we get here? Now, this latest Israeli strike comes as nuclear diplomacy was already, if I can use the phrase, on life support. The 2-month deadline set by President Trump for a new nuclear deal had just expired. The UN's nuclear watchdog, the IAEA, passed a resolution Thursday accusing Iran of breaching non-proliferation commitments. Iran responded by pledging to accelerate its nuclear program, warning it had, and I quote, no option but to respond, end of quote. A 6th round of talks was scheduled for Sunday in Oman. But by Friday morning, as we all know now, diplomacy had been drowned out by what we saw, which is explosions in Tehran and elsewhere in Iran as well. But beyond, what's happening now is a deeper, bigger, more precarious question. Could the Strait of Hormuz become the next geopolitical flashpoint? And this essentially is the map which shows you exactly that. As you can see, it's marked out in that red circle, why that is so important. It's often described as the world's most important oil artery. The Strait of Hormuz connects the Persian Gulf with the Indian Ocean. It handles 30% of the world's seaborne oil, 20% of global LNG supply, and most of Saudi, Iraqi, Kuwaiti, Qatari oil exports. Interestingly, at its narrowest, as you saw on that map, is just 21 miles wide. So it's like a choke point, geopolitical choke point, but with little or no room for error. Now, for decades, Iran has threatened closing the Strait of Hormuz, but despite fiery rhetoric and a long history of confrontation, the strait has never been closed. Consider these flashpoints. They'll come up on your screen quickly. The 80s, which is the Iran-Iraq tanker war. 90s, disputes with UAE over Gulf Islands. 2007-8, speedboat standoffs with US naval forces. 2008, a direct warning that they're going to seal off the strait if attacked. 12, 18, 19. This is the sanctions era. Each time, basically, and there are multiple instances, Iran pulled back from the brink. They threatened, but they pulled back. Why? That's the question. Because shutting down the Strait of Hormuz isn't a strategic masterstroke. It's not leverage. It's economic self-harm. Iran itself depends entirely on seaborne oil exports through the same strait through which it earns precious foreign exchange. It's the last major buyer. China would face massive supply disruptions, risking, of course, that very important economic relationship for Iran. The closure of the strait would also violate international norms and could fracture the fragile Gulf balance. Without Gulf Cooperation Council, which is GCC support, any shutdown would be seen as an act of aggression, possibly, not leverage. Even fellow oil giants, and there are big oil producers in that region, wouldn't support it. Saudi Arabia, for example, while it can divert some of its exports via pipeline, but the vast majority still passes through this strait, the Strait of Hormuz. Kuwait, Qatar, Bahrain, etc. have no alternative routes. And most of this oil essentially is headed for Asia. And of course, in Asia, China is by far the biggest buyer of this oil. And the forex which comes into Iran, it's critical to regional stability and revenues for that country as well. So this is the real flashpoint. This is the reason, the Strait of Hormuz. And, once again, as these tensions escalate, will that come into play? Will Tehran, Iran essentially threaten to close it? It's never happened before, and one hopes it does not. But I think that is the reason why markets are on edge watching this very, very closely. Back to you.
Thank you. Well put. We will slip into a break on that note. We'll come back with more market insights. Stay tuned.
Welcome back. And the crude oil is clearly the top story right now. The kind of impact that we've seen coming in between Israel and Iran has had the prices run up by nearly 12% in the Asian markets right now. To take the discussion forward on the probabilities that are being discussed, we are now joined by Jörg Keener. He's Managing Director, CIO at Swiss Asia Capital. Jörg, hi, thank you so much for joining in. And what a start to the day where you are looking at crude oil prices surging, a preemptive attack, but it's more to do with what can happen from here on. Strait of Hormuz, top up in the headline here. Do you see an impact coming in there? Can we reach until that?
Yeah, I think, the geopolitical system has been under stress now for some time. A, because of the trade structure, but B, as well with the militarization in Ukraine, and certainly now for quite some time in the Middle East. And on both sides, we don't really see an end of the conflict yet.
Jörg, do you see an impact on Strait of Hormuz at all, or do you think before we get to that, the situation will ease off?
Look, I think Iran is keeping the right to retaliate on the attack they have. So I can't see that we're just going to walk away from that. So what's going to happen to the Straits thereafter is everybody else's guess. But in general, if you look at shipping, you can see shipping rates going up, insurance rates going up. So trading routes are being rerouted. So we're going to have the impact economically being felt down the road.
Jörg, with where we stand right now, do you see a probability of a wider Middle East-West Asia conflict?
I think it's been going on already for some time. I think if you look at the present war structure, I mean, we had all North African countries involved since the last 20 years. We've been the last few years, basically whatever's been on the east side of the Mediterranean being involved and expanding. So I think we are far away from a resolution, and the conflict means militarization.
Jörg, just trying to get a clearer line there. You're saying that a disruption on Strait of Hormuz is not ruled out?
The impact, it doesn't mean necessarily you have to close. The commercial people will make decisions on how trade gets done. And that impact is still got to come. People will not take risks by default. And as such, the market is reacting. It's reacting from a pricing point of view of commodities, and it's reacting from a point of view of people moving into precious metals.
Clearly. Jörg, with the way the crude oil prices have reacted, and we've seen 10, 12% of a surge, it seems to be cooling slightly right now, perhaps about a profit-taking as markets await for further developments or information coming in therein. How would you look at crude prices from here? How would you want to, how would you look at it until Monday, that is? Because we're looking at a weekend right now. Things can happen. Where would you see the prices?
So most bad things happen over weekends. So you can actually believe that we're going to get more reactions to that over the weekend. So I think I would rather be sitting tight and look at higher prices to go. And I don't think these prices are very high, but in general, most people haven't really got exposure to the commodity, the oil, or the precious metal sectors as such. So the weighting in people's portfolios is so low, the prices can still move up significantly.
What does it really mean for the Asian markets as well? Because Strait of Hormuz is from Middle East to Asia, I mean, that is the route there. How would you look at much of this Asian markets reacting to this?
I think in general, down the road, if it's going to be longer lasting, it's inflationary for everybody. And I think Asia can do a bit with inflation because we have the deflationary impact from the trade war with the United States. Whereas in the US, we have the inflationary cycle of the rebuilding of the economy. So we're going to be in big tides, moves up and down of expectations, which way we're going to go over the next couple of months.
Jörg, geopolitics is one part of it. Tariffs is a second. The kind of weak economic data that we've seen coming from China, even US for that matter, has been a third point. And then we've seen rising inventories in US. There's just so much happening right now. How would you, or what are you watching going forward from here?
I think, in periods like that, people are looking to safeguard their portfolios. They start looking at safety first. In an environment where there are too many questions, and I think that's from that point of view, the flow is moving into gold. It's a safety net. It's a safety net against all the things we've been discussing. And I think in the US, the exposure to gold in portfolios is around 0.3%, which is about 10% of what used to be in normal times. So any readjustment on that could actually be moving the price there up significantly. On the energy side, I think we already have the impact of energy shortages, particularly in Europe. So prices can still go up significantly. It doesn't need much dislocation in energy to have higher prices.
Here, a final question from my side, and that really is if you can give us a sense on where the prices can be headed from here. We've seen $80+ off a high in 2025. We've seen prices go below 60 as well. It's been a volatile last 5 months. Would you say it's going to be equally volatile as we move ahead from here? And what is the price range that the markets could look at?
I think we had swing factors in the market, but we didn't have dislocation and geopolitical risks. Right now, we have geopolitical risks increasing in dislocation. So your price swings will become bigger, larger, faster, and that's going to rock quite a few people out of positions all the time because we're not used to volatility. We've been living in a world where interest rates were zero and there was only one way to invest. And today's environment is changing very differently. It looks more like the end of the 1970s. And that means, you need a conviction investment or you need strategic investments. And I think right now, both of that is just about being implemented by most investors.
Thank you very much for joining in to put it in Indian context and what it means for the oil marketing companies, which are impacted today. Stocks are down 3-4% across the board. We have M.K. Surana. He was the former CMD of HPCL. Mr. Surana, morning. This is Rima here. In 2 days, we've seen crude prices surge nearly $10 per barrel. Now, I'm sure, in your long career, you would have seen instances of such sharp spikes, especially on account of geopolitical tensions. So just to first, begin with the context, how will this impact oil marketing companies?
Good morning. And oil prices has always been up and down. If you see last many years, when it increases very, very sharply. We have seen prices going from, let's say, $80 to $128, and then again falling back to $50 also. So the current increase or hike is based on the increasing tensions in the Middle East and slightly uncertain world. And it will depend on how it trends out. Probably 3 scenarios are possible. One thing is that it doesn't escalate further. It escalates to engulfing the whole of the Middle East and Strait of Hormuz, and it cools down. One of the 3 possibilities are there, and the crude prices will guide it accordingly. As far as the Indian market is concerned, because the prices had been kept static for quite some time by the government, and the variation was managed through increase or decrease of the excise duty, I assume that if the current prices, let's say around 75 or so, remains below that or maybe up to 80, I don't see that the Indian market fuel prices will be changed. And maybe if it increases beyond, government may think of managing it through excise duty, especially considering the forthcoming election in some of the states.
So which means that the oil marketing companies will have to take the hit on their retail fuel margins because they will not be able to pass it on. So this increase is going to hurt them. To what extent, sir, can the margins come off if you assume crude is at $75 per barrel? On the retail fuel side?
The retail fuel margins had been good for past few months. So there had been a clamor for reducing the prices, if you might have been seeing some of the narrations. So it only means that the reduction in the price will not happen in the immediate future. That's one. The margins which were beyond the normal level will reduce to some extent. And if the crude prices remains higher for longer time, then probably government may think of reducing the excise duty to reduce the trouble for the oil marketing companies. That's what I see as of now. Of course, it is difficult to forecast the government intention on that.
Mr. Surana, good morning. Thank you for joining in. What, according to you, is a comfortable range for oil marketing companies when it comes to crude oil prices? Because historically, with the fall in prices, the margins were at the auto retail margins, 11 to 12 rupees a litre. Now they've come down to 3 to 4 rupees a litre. What is that price range that oil marketing companies feel, okay, this is a comfortable, say, $5 to $10 price range? If the crude continues to hover around that level, we are okay.
The below 60 to 70 is a good range for the Indian market. I will put it this way. Now, the question is that in that case, oil marketing companies will have reasonable margin to make, and they will also have capacity to absorb some of the shocks. But we also need to be conscious about the integrated margin where there is LPG also, where the oil marketing companies had some losses accumulated over a period of time, and they have to recover that part. So overall, I see that $60 to $70 is a good price range for the Indian market. And if the tension doesn't escalate beyond a point, and then I think that by the fourth quarter, it should be back to that range. I don't see any structural reason to continue beyond $70, let's say in Q4 when the summer season gets over, the high driving season gets over. And with the increased supply of crude from the OPEC countries, which has been accelerated last 3 months, and if it continues further. But if the tension escalates, then we need to watch it out. It may be much higher.
All right, Mr. Surana, thank you so much for sparing time and joining us today to put things into perspective for the oil marketing companies considering the rise in crude oil prices. You know, I was just reading a note from JP Morgan. They put out a note yesterday or earlier that worst case scenario, the crude oil prices may go up to $130 a barrel.
I thought 120. Is it straight
120 to 130,
yeah.
the worst case scenario if that plays out. But yes, of course, as Mr. Surana also said, that there is no structural reason for oil prices to stay above $70 considering the fact that there is a significant output hike coming in from OPEC as well. We'll take a short break, but just before we do that, CNBC-TV18 Access is a premium membership-based service available on CNBC-TV18.com. It offers members exclusive content, market intelligence, and expert thought leadership. The membership includes access to CNBC-TV18's flagship events, interaction with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits. Now, designed for an immersive and enriching experience, it empowers members with premium business intelligence and unique lifestyle benefits. The power of insight, the privilege of access, exclusivity, experiences, and influence is yours to claim. You can become a member by logging on to cnbctv18.com/access/plans.
Welcome back. Let's turn our attention now to the tragic Air India crash, which took place yesterday. Investigations are still underway. Questions are mounting on what went wrong. But let's find out what the situation is on ground. Our colleague Madiha is now joining in from Ahmedabad. She's at the Air India crash site with the latest update. Madiha.
Right, we are just meters away from the crash site where Air India Flight 171 crash landed at the Medical College Hostel building that you can see behind me. Fire tenders, ambulances are going in and out as rescue efforts are still underway. There are investigating teams inside that are trying to recover evidence and, the flight data recorder and the cockpit voice recorder to determine what caused the crash. Just minutes ago, we had the Prime Minister Narendra Modi visiting the crash site. He was accompanied by the Civil Aviation Minister Ram Mohan Naidu. The Prime Minister was assessing the situation, speaking to officials about rescue efforts and what could have possibly gone wrong. From here, he went to meet the only survivor of the 242 passengers who is admitted in a hospital. He miraculously survived because he jumped off the emergency gate. It is believed that he jumped off the emergency gate next to his seat. The Prime Minister went to meet him. He spoke to him. He spent some time with him, asking him questions about what happened. The Prime Minister also spoke to the victims and the injured and the families of the victims about the incident. Investigating teams are still trying to find out. They are still yet to recover the voice data, the flight data recorder and the cockpit voice recorder. But what we know so far is 241 passengers, including 2 pilots and 10 cabin crew, have been killed. We hear from people here who have been involved in rescue efforts that the fire had spread around 300 meters. So everything, including trees, cars that were parked near the building, were also charred. Everything was just burnt, and we know that there was 125,000 liters of fuel on the aircraft, and that ignited the fire. That led to such a massive explosion.
Madhya, thank you for bringing us that update from the site of that tragic accident that took place yesterday afternoon. Of course, visuals can be disturbing, so viewers' discretion, of course, is advised. We take a short break. The Nifty is still down around 210 points as we speak. Mitesh Thakkar returns with a quick chart check and some trading ideas as well. Stay tuned. Welcome back. Still 210 points down on the index, but there are plenty of specific movers. Then Shipping Corporation of India is now up 12% as we speak. The shipping names are continuing to build on to their gains. GE Shipping is also now up 6.5%. And of course, the oil sensitives, some of them taking a bit of a knock, while those like ONGC and Oil India continue to do well. But the capital market names continue to witness some profit booking. Angel One's down 3%, and some of the other names too not doing too well for themselves today. Mitesh Thakkar is joining in now for a quick chart check. Mitesh, good morning. Well, the good part is, if you could call it that, is the fact that we've protected the recent swing low of 24,462. Does that remain the key to hold on to the downside, to maintain that the uptrend is still intact? What are the levels you're watching out on the index and your stock recommendations for now?
Good afternoon. So I think on the index, 24,500 zone is my support area, and I think we got a low of around 24,473. So I think that's where the support is. If you recall, the entire second part of May and early part of June, the market was sideways and it was taking support around these levels of 24,500. I think that level is coming to play again. But the overall structure on the hourly and 2 hourly charts is slightly negative, which means that we could go and retest those levels or maybe even break below them. So I'm not very positive, despite the fact that from the intraday lows, we are recovering. In fact, I believe that it might be difficult for the Nifty to get past 24,800 to about 24,850 zone, and would even look at some shorting opportunities as we get closer to about 24,750, 800 levels. So that's the idea on the index.
And what about stocks?
Yeah, I have a sell on HUL. That's showing signs of a breakdown. So keep the stock about levels of 23, 25, and look for a target from 22.70 to begin with. And a buy on Max Health, which is a buy with a stop below levels of 1204 for targets of 1265.
Thank you very much for that. That's Mitesh looking to short the Nifty if it gets to levels of 24,750. Sorry, what did I say? Yeah, 24,750 to 24,800. Get into a break. On the other side, we'll talk about market fundamentals. Ajit Banerjee will join in on the other side. Stay tuned. Welcome back. There's only one sector which is firmly in the green, and that's the Nifty India defense sector with a gain of 1.9% in individual constituents. So BEL is now the top Nifty gainer. That's up nearly 2%. But BDL, Zen Technology, Garden Reach Shipyards, HAL, across the board, despite the weakness that we're seeing in the markets, these stocks are trading fairly firm. Ajit Banerjee, President and CIO from Shriram Life Insurance, is now with us to talk about markets, valuations, flows, strategy. Ajit, thank you very much for joining in. This is Reema here. So let's start with the strategy. It's been a very volatile first half, but as we speak, from April lows, we've managed a very strong pullback, recovery. How do you expect the second half of the year to pan out, and what would your top bets be?
So first of all, Nima, good afternoon and thanks for having me in the show. I think at first I would like to offer my heartfelt condolences for those family members who have lost their life yesterday, and prayer for those who are recovering. So as far as markets are concerned, yes, even last year also we saw there has been a mixed trend as far as the performance is concerned. First 6 months saw phenomenal performance, even market reaching its peak. Second half, again, we were seeing that there was a pullback which happened because of the excessive valuations, earnings not living up to it, as well as, the news of Trump coming in that potentially influenced the investors to once again fly back to safety, as well as which is the reason why money moved back to US. Now, coming to March, once the new, President Trump version 2 took over with the series of announcements and the uncertainty which therefore developed, and the US markets also became quite stretched for that matter. So we again saw money again moving back to India. So fundamentally, I think Indian markets are looking pretty good while the external shocks remain. But because India predominantly is a domestic-oriented economy, that's where it is, I think, gaining the strength, as well as fundamentals are looking very good in the sense that there are certain tailwinds which are there. With even the inflation under check, it has come down at 2.82 from 3.16, what we saw. Fiscal deficit is well under control. Even the forex deposits are going good. Monsoon, while there is a thaw in its progress, but apart from that, I think as of now, there is no trimming down of the forecast that we are seeing. So and at the same time, RBI is very supportive with its the what we are saying, using the words bazooka, what they have actually announced in the last MPC meeting, which one didn't expect, except for the fact that the change of stance is something which possibly is something which has a bit dimmed the market, because of which we saw the debt market actually reacting negatively, and the trend continues. So yeah.
Ajit, sorry to cut you in. We're running out of time. So with this developments that have taken place today, the tailwinds that you were talking about, the rise in crude oil prices, does that alter the need for a bit of caution in the near term? Because now these tailwinds might just become a temporary headwind, even if it is temporary, because the current account deficits will fluctuate, inflation might rise because of this rise in crude oil prices, and the significant rise at that. Would you warrant some near-term caution right now?
I mean, definitely one has to be cautiously optimistic. That's the word I would like to use. But at the same time, if you would have seen that even the level at which the government has budgeted for the crude, it has not yet touched that level. So there is a bit of a buffer which still is there. Even when the rates were at lower level, there was no rate cut which was at the consumer level which was passed on. So I think government is operating with that. So I suppose until and unless it crosses or touches the 90 plus level, there's not much to be worried. But definitely as an investor, we need to be mindful and watchful about how the trends are going. And then geopolitical crisis also has other ramification in terms of the risks, as well as the supply chain costs and all that we need to be watchful of.
Ajit, a lot of these tariff-related sectors as well, right, that have been facing this uncertainty. Now that there was this tariff uncertainty already, now you're coming up with this additional headwind as well. When with President Trump announcing that he might just end up announcing some unilateral tariffs over the next week or 10 days. And he's also considering the idea of doubling auto tariffs over the next few days. Now, what does that do to a sector like auto? Because not pretty much, you already have this one headwind of lack of domestic demand on ground, and now you face an additional headwind of tariffs. What do you do in a sector like that?
So I think, auto certainly is something which is, as our in-house view is a bit, pessimistic about it at this point of time, because there are headwinds in terms of the, input cost, as well as even for the EV sector, there is uncertainty about rare earth magnets and all that. Plus this, export, opportunities also are getting limited. So I think there would be near term some amount of, I would say, not so favorable terms for the sector. So that's the reason one needs to be, avoiding it at this point of time for any fresh exposure, or rather cut short the position also if there is, need arises. So.
What about some of these PSU names, Ajit? They've been the talk of the town over the last 1 month.
Yeah, so PSU actually, interestingly, I think first 6 months were doing well. Then in the last year, then next 6 months, again, it found it out of the favor. Then again, after this geopolitical crisis in our country has taken, I think, and some of their companies their products had been demonstrated. It was almost like a practical application of their products, which is, so that's the reason it has ignited a lot of interest now. And I think there is a merit in their capacities as well as their quality. So I think that is what is something once again has brought it back to the limelight. And I guess that is going to be, because any strong nation needs to fortify themselves adequately. And it has, I think India has shown that resilience, and that is what actually is helping the sector pretty well.
All right, Ajit, thank you so much for sparing time and joining us today. Looking forward to having you more often on the platform. Ajit Banerjee there of Shriram Life Insurance. Take a short break. More on the markets on the other side. Stay tuned.
Welcome back. Still down close to about 200 points on the Nifty, 24,685. That still means we're up 200 points from the day's low. It's all about defense, but outside of that, you've got GE Shipping and SCI rallying. Perhaps, as Hormuz was just telling me, the Baltic Dry Index has seen a bit of a spike, and a few IT names like Tech Mahindra or Wipro are also back in the green. Well, that brings us to a close on trading. Thank you for watching. Don't go anywhere. Halftime report is up next.